Hey, what's up, everybody? Gold hit another all-time high yet again this morning. Silver, as I'm recording this video, is currently in the red. We're going to discuss it on this video today. Please consider hitting that thumbs up button on the video and let me know your thoughts, your opinions in that comment section below. Let's talk about these precious metals, gold and silver. Yes, indeed, gold did hit another all-time high again today. According to Kitco, the trading range today for gold is the low for today is $2,155.50. The high is $2,185.70. So that would mark another all-time high for gold. Gold, since then, has pulled back a little bit as I'm recording this video. Gold is currently up a little bit more than 0.5%, up 0.54%, or up $11.60 to $2,171 even. Silver, is it up or down? Silver has been up and down this morning, but currently slightly, just a little bit in the green. According to Kitco, silver is up 0.08% or up 0.02 to $24.30. What is pushing gold to all-time highs? I think there's a lot of factors involved, and I'll be discussing, giving you my thoughts, my opinions on that on this video. Please do share your thoughts, your opinions in that comment section below. But I did do a video this past Monday on March the 1st, and I said Jerome Powell is going to be speaking. He's going to be testifying 2 days in a row. He testified in front of a House committee on March the 6th and in front of a Senate committee on March the 7th. And I thought, based on what Jerome Powell said during his testimony, the words that came out of his mouth was going to push gold and silver higher or pull it back down. And what he said absolutely sent gold and silver up higher. On Monday, when I did my video about gold and silver's big rally, at that time it seemed like that rally was mainly because the markets were baking in that they thought Jerome Powell was going to start cutting rates in June, at least in my opinion and based on the reports. But gold and silver continued the big rally on Wednesday, March the 6th, after Jerome Powell testified in front of the House committee, because the markets, and sometimes the markets hear things, in my opinion, that Jerome Powell does not say, but they took his overall testimony, in my opinion, and based on what I was reading, and I did listen to a little bit of that testimony. I didn't listen to the whole thing, but I did listen to enough of it, and the markets took it as Jerome Powell was dovish when it came to interest rates, future interest rates, either interest rate increases or interest rate cuts. The market took it as Jerome Powell was dovish. Now, I didn't take any of Jerome Powell's testimony as being hawkish by any means, but I also didn't hear anything that came out of his mouth as being extremely dovish either. I didn't listen to the whole testimony, but I think I did listen to enough to know that he did not sound very extremely dovish, although the market seemed to think that he was. He didn't give any sort of a time frame that I heard of that when he was going to start cutting rates, but he also didn't say that he was going to increase rates. He did say that inflation was not yet down to their 2% goal, but that he thought that they were getting close, but still said that they were not down to the 2% goal for the rate of inflation. Now, in my opinion, I don't care what they say necessarily the rate of inflation is, because what I'm seeing, the goods and services that I'm paying for, is definitely not coming down, or at least coming down very much. Prices at the grocery store are still up. Gas prices are going back up. And the prices, if you decide to go out to eat, are definitely way up from where they were. And in my opinion, that's because they have to pay the workers that are in said restaurant more money. So they have to increase not just the inflation on the food that these restaurants are paying for, the higher prices that it costs to bring in the food, but also the higher prices that it's costing to pay the workers. So higher food cost and higher labor cost results in, if you and I decide to go out to eat, then we are paying more money. So prices are definitely up way more if you decide you want to go out to eat than in a grocery store, but prices nonetheless, in my opinion, based on what I see in my area, are still very high at the grocery store. What caused the big rally for gold today? What caused gold to hit another all-time high again today? Although it did pull back from the all-time high, but yet did hit that all-time high very briefly before pulling back. That's because of the jobs report that was released today, reporting overall weaker U.S. jobs data. All the reports that I've read today about today's jobs report is all reporting overall, and I'm using air quotes, overall weaker jobs data, because the actual non-farm jobs number came in higher than expected at 275,000 versus the expectations of a rise of 198,000. So the number was actually stronger. This brings me to an article that I would like to reference on Kitco News by Jim Wyckoff, and I would like to also add something to this as well, so please stay tuned. But on Kitco News by Jim Wyckoff, it says gold prices rally to record high after overall weaker U.S. jobs data. Gold prices are solidly higher and hit new record highs in early U.S. trading Friday, following a major U.S. economic report that came in weaker than market expectations. Silver futures price hit a 9-week high. April gold was last up $21.30 at $2,187.50. May silver was last up 0.167 at $24.745. Arguably, the U.S. data point of the month saw the February employment situation report from the Labor Department show weaker internals, even though the key non-farm jobs number came in up 275,000 versus the expectations for a rise of 198,000. So that number was actually stronger than expected. The January NF payrolls number was revised down, there we go with more revisions, to a rise of 229,000 compared to the original rise of 353,000. Also, the unemployment rate rose, and that's something that I want to discuss is the unemployment rate. The unemployment rate rose to 3.9% from the January report reading of 3.7%. Now, I do want to talk a little bit about the unemployment situation because I have been seeing, let me know if you've been seeing the same thing around your area, but I have been seeing a lot of people close to me getting laid off. I've been seeing layoffs in the company that I work for. I've been seeing friends telling me about multiple layoffs. One friend told me about layoffs in the company that they work for back in January, a big number, and then they did additional layoffs late February. And I'm not talking about small numbers in layoffs, I'm talking about major layoffs. And then I heard another report yesterday when I was listening to a news station on the radio in the car that was talking about a lot of layoffs and less jobs hiring, less employers hiring. And that, in my opinion, is what Jerome Powell wanted, the entire goal. Every time Jerome Powell said weakening of the labor market, he meant jobs. In my opinion, that's how he wanted to lower the rate of inflation. Less people spending money, putting cash out into circulation, out into the economy. And how did he want to do that? He said it time and time again. Some softening of the labor market. And what does that mean? In my opinion, I've said it multiple times on many different videos, that is jobs. Either people losing their jobs or employers removing recs or job openings, but one way or another, that is jobs that people could have had that they're not going to get, or jobs that people did have that they were going to lose. And that, in my opinion, is a very unfortunate situation. But the Fed giveth and the Fed taketh away. The Fed prints up all that money, dishes out all that money. Congress does all the spending. Congress sends people a whole bunch of stimulus packages. And those stimulus packages, well, in my opinion, we are seeing the result of all of those stimulus packages and all of Congress's reckless spending from over the years. There is no free lunch, and we're seeing the result now because it's resulting in a lot of inflation, increased prices all over the place. And the Fed, what does the Fed want to do? Well, they want to soften up the labor market, and that causes people to, unfortunately, lose their jobs. Some people lose their jobs. Hopefully it's nobody watching this video. Hopefully everybody watching this video still has, hopefully you all still have your jobs, but I am seeing a lot of people losing their jobs. And then people ask, why is demand for silver down? And in my opinion, the demand for physical silver is down. In fact, many people are probably selling their silver because they need to pay bills. And I'm sorry for going off on a little bit of a rant here, but that again is another unfortunate situation because I don't like to see people struggle. Back to the article. The unemployment rate rose to 3.9% from the January report reading of 3.7%, and the labor force worker participation rate was only 62.5%. All in all, the jobs report falls into the camp of the U.S. monetary policy doves who want to see interest rate cuts sooner than later. And I don't know if they're going to get that sooner than later, but I guess we'll see. The key outside markets today seeing the U.S. dollar index lower and hitting a 5-week low following the downbeat U.S. jobs report. Crude oil prices are weaker and trading around $78.50 a barrel. The yield on the benchmark 10-year U.S. Treasury note is presently fetching 4.046%. So there you have it. One of the reasons out of many reasons why gold is yet again pushing, or at least it was pushing, another all-time high. And that is one of the reasons is because of a weaker jobs report. Even the overall number was higher than expectations, but unemployment is also higher than expectations. So with the weaker than expected jobs data, and who knows if these numbers are going to get revised later on down the road and what that's going to do to the markets, but with the weaker than expected jobs data, that is telling the markets, or at least what the markets want to hear, and that is that Jerome Powell is going to start cutting rates sooner than later. Is that fact? Is that a factual thing? I don't know. Again, I'm very skeptical about Jerome Powell cutting interest rates very soon. But according to the CME FedWatch tool, it is once again pointing to that he is going to start cutting rates as early as June. And currently there's a 60.6% chance that Jerome Powell in June will cut interest rates or start easing by 0.25%. But again, according to the CME Group FedWatch tool, there's a 97% chance that rates will remain unchanged for the month of March, and we have, as of the recording of this video, still 12 days, 2 hours, and 25 minutes until Jerome Powell does make that decision, or at least that announcement. And for May, there's a 76.3% chance that rates will still remain unchanged, and that means, according to the CME Group FedWatch tool, rates in all likelihood, even if it does happen in June, we still don't know, but if rates are going to be cut, it looks like they will not be cut any sooner than June. But of course, that can always change, and in fact, they may not start cutting in June. That could be pushed out even further, and if that is, in my opinion, then that is going to definitely cause a pullback in the silver and gold prices, in my opinion. I do appreciate everybody for taking time out of your day to watch this video. Definitely let me know your thoughts, your opinions about everything that was discussed on this video. Like, comment, subscribe, share, and I'll talk to everybody on my next video. Thanks a lot, everyone.